without any doubt.
What would you recommend for retail, which has been completely out of the equity market? Maybe they feel vindicated now, seeing the way the market's going. But going forward, where would you ask retail to put its money?
Retail, again, interest rates I don't think can head down any lower, because given this follow the rupee, I really have low hopes of the RBI, which I have said this many times, has been sort of one of the prime drivers of the situation that we find ourselves in. It's fashionable to blame politicians, but I think it's about time all of us started criticizing these so-called independent institutions a lot more than they get right now in the media, which is the CAG or the RBI or even the Supreme Court, which all in their own ways, even though well-intentioned, have really created a very, very inimical landscape for investing and for FDI in India. So, for the retail investors, unfortunately, not much choice. He has to go back into bank deposits, because at least again he will have return off capital. They're not looking at return on capital anymore. And then, ride it out. The trade will come back. That's the point when you can nibble a bit at equities. But I don't think, like I have said before, equities are not meant for poor countries like India. It's meant for rich countries who have surpluses to take a risk on. When you're living hand to mouth, equity is the last thing any investor should be looking at to put his money into. And I think that realization has dawned upon people, which is why you're seeing the numbers that you're seeing in terms of outflows from the mutual funds. So I don't think there's much option the retail investor has.
We've just been speaking to a few policymakers in Delhi, and they continue to think that growth will rebound, and maybe perhaps more strongly than people anticipate. Do you see any signs of that, of Indian growth picking up, or are you still quite hopeless in the near term?
Well, if you look at the last quarter's numbers, I don't see whether in the first quarter you will see a big difference in that number by way of 4.8 becoming higher than that. I don't see that happening. So if you're looking at 6 or 6.5, 6.7%, whatever the forecasts are of the policymakers for the full year, and if you, out of that, one quarter goes at 4.5 or 5, or let's say 4.8 or 5%, then the rest of the 2 or 3 quarters have to do a lot of heavy lifting. Now things can happen, and I hope so, as I'm a patriotic Indian. And I hope things really do turn around remarkably and strongly for the economy. But looking at just the entire situation globally and in India, that would be a really long shot. And, I don't think the government has understood the extent of the problem in terms of jobs. Just look out there. There are no jobs. That's what I really feel strongly about, that we are producing, God knows, 3-4 million graduates a year, and they're streaming out into the sort of job market, and there are just no jobs. Now, if you have that situation, it bodes very ill for, a kid of 17, 18, your entire demographic dividend sort of stands challenged then. So I think the government really, in order to get the 6.5% number, it has to think out of the box, figure out ways in which this workforce can be put to use, because the services part is more or less tapped out in terms of job potential. Whether it is financial services or telecom, which were the two big, and a third was IT. All three big drivers of sort of at least urban and semi-urban job growth. Those have been more or less maxed out. So where do the jobs come from? And if you don't have that at the ground level, talking of an abstract like a 6% GDP growth really means nothing. A guy needs to be fed, a guy needs to be clothed. That's what the government really needs to focus on. And I don't see enough seriousness on that front, unfortunately.
Just one final question. Whatever pain plays out in the next few months, do you think it's still conceivable that this can be a sharp cyclical bear market, and next year, maybe post-elections, depending on how it turns out, we could still have a bullish kind of a market?
Can be. If we have a bad year this year, as it appears to be, then there's a good chance that we might have a significant up year next year. So we would set ourselves up for at least, I'm not talking a bull market anymore, because I don't think we should start, I think time frames have been compressed, and more or less a bull market, bear market gets done in 12-15 months time. So just a 50% rally from wherever the market ends would be a bull market, even though it might last just for a year. I think we will set ourselves up for a move like that over the next 12 months time for sure. And and we will play it. We'll be around to play it.
Shankar, always a pleasure. Thank you very much for your time today.
Thanks, Udair.